All right, so hey everyone, welcome back. We're going to take a deep dive into the business news that really stood out to me in this November 7th edition of Pasted Test USA.
Oh, yeah.
Yeah, we're talking about the Fed's latest move, some shakeups in tech and energy, and how businesses are responding to, well, all of us consumers.
Right.
And all of this is happening against the backdrop of Trump's surprise re-election.
Yeah, what a time.
So let's jump right in. The Federal Reserve just cut interest rates
And it did.
by 1/4 percentage point, to be exact. Now, this is kind of a big deal, especially with all the uncertainty around what a second Trump term might mean for the economy.
It is. It's definitely a signal, right?
Yeah.
The Fed, they set this thing called the benchmark policy rate, which is essentially the interest rate banks use as a baseline when they're lending money to each other. And when the Fed cuts that rate, it makes it cheaper for businesses and people to borrow money.
It's kind of like a domino effect.
Right. Exactly. The idea is that cheaper borrowing encourages businesses to invest more, people to spend more, and that keeps the economy humming along.
Humming along. I like it. So let's move on to tech, where we're seeing some pretty interesting wins and losses. Moderna, the biotech company, is reporting a profit this quarter.
It's true, they are.
But it's not all sunshine and roses. Their new RSV vaccine isn't doing as well as they hoped.
Yeah, launching a new vaccine, it's never easy. There are always hurdles. It'll be interesting to see, if this is a temporary setback or a sign of bigger challenges for Moderna.
Absolutely. Meanwhile, Qualcomm, the company behind those little chips in our smartphones, they're riding high on surging sales.
They are, especially in China, which is actually a good sign for the global chip market. It's been facing a shortage for a while.
So maybe a glimmer of hope for those of us waiting for the latest gadgets.
Possibly. But, the chip market is a complicated beast and there are a lot of moving parts.
For sure. Speaking of complicated beasts, not all tech companies are having such a good time. Freshworks, a company that makes software to help businesses manage customer relationships, they just announced some layoffs.
Yeah, 13% of their global workforce, which that's a lot of people.
It is. It seems like tech companies are reevaluating their strategies. Remember those days of growth at all costs?
Oh, I do.
Maybe those days are over.
It seems that way.
Let's shift gears now to the energy sector. Halliburton, a big name in oil field services, just missed their quarterly profit target.
They did, and it looks like decreased drilling activity, especially in North America, is the culprit.
What's behind the slowdown?
Well, lower oil and gas prices are a big factor. It just becomes less profitable to extract those resources when prices dip. And you can see that reflected in Halliburton's North American revenue. It dropped like 8.5% this quarter.
Wow. So is this a bad sign for the entire oil and gas industry? Or is it more specific to Halliburton?
It's a bit of both, honestly. Halliburton's business model is sensitive to fluctuations in drilling activity. But those lower oil and gas prices, that's a broader trend that's going to affect the entire sector.
Right, but it's not all doom and gloom in energy. Energy Transfer, which operates pipelines and energy infrastructure, they're actually seeing some promising opportunities.
They are, yeah. They're getting tons of requests for connections from power plants and data centers.
Like a lot of them.
Over 90. Think about it. That's a lot of power. And it really points to this increasing demand for natural gas, particularly from data centers. Those things gobble up energy.
They do. So while companies like Halliburton are dealing with the slowdown in oil and gas, it sounds like Energy Transfer is finding ways to grow in the natural gas space.
Precisely.
Okay, so we've talked about the Fed, tech, and energy. Now let's talk about how all of this is affecting, well, all of us.
Right, the consumers.
It's exactly. AMC Entertainment, the movie theater chain, they're having a rough time right now. Fewer blockbuster releases, plus people being a little more cautious about their spending. It's taking a toll.
It makes sense, right? When people feel like their wallets are a bit tighter, they tend to cut back on things they don't absolutely need, like movie tickets.
Totally. And speaking of cutting back, Beyond Meat, the plant-based meat alternative company, they're feeling the pinch too.
Yeah, it's tough to compete on price when people are watching their budgets. People might love the idea of a plant-based burger, but when money's tight, they're gonna go for what's cheapest.
It's true. And Coty Inc., the company behind a bunch of beauty brands, they're expecting lower profits this year.
It's that discretionary spending again. People just aren't prioritizing things like lipstick and mascara as much when they're worried about the economy.
It makes you wonder, though, are there companies out there capitalizing on these trends?
There are actually. Take Elf Beauty, for example. They're actually raising their sales and profit forecasts. Yeah, they're betting that affordable cosmetics will be a hit with budget-conscious consumers.
Smart move. So while some companies are struggling, others are finding ways to thrive in this new environment.
Exactly. It's all about understanding consumer needs and being able to adapt.
And speaking of adapting, we can't forget about the elephant in the room, Trump's re-election.
Right. It's definitely added another layer of uncertainty to the mix.
It has. The markets have reacted kind of strangely, though. There seems to be a sense of cautious optimism, like maybe investors are familiar with Trump's policies and are anticipating more pro-business measures.
Maybe. But there are also concerns about potential volatility and unpredictability. You just never know.
Exactly. So what should people be doing? Should they be making big changes to their investment strategies or business plans?
I think it's too early to tell what the long-term impact of Trump's re-election will be. The key is to stay informed, be prepared to adjust, and, don't panic.
Don't panic. Good advice. All right, let's dive a little deeper into how Trump's re-election is specifically impacting certain companies. Albemarle, for example, the company that produces lithium for electric vehicle batteries, just reported a massive loss.
Over $1 billion for the third quarter.
$1 billion. That's wild.
It is, and it really highlights the volatility of that electric vehicle battery metal market. Lithium prices have tanked this year.
Over 70%, I read. 70%. And their CEO basically said they're bracing for continued low lithium prices. Not exactly a vote of confidence for the EV market.
No, not really. It does make you think about the challenges facing the electric vehicle industry as a whole, though. Demand for EVs is growing, sure, but not at the pace many predicted. And now, with Trump back in the picture, who knows what will happen to those government policies that support EV adoption?
Exactly. It's a whole web of interconnected factors. Now let's get back to our friends at AMC Entertainment. They're not just dealing with fewer blockbuster releases, they're also seeing a decline in attendance and revenue as people cut back on their spending.
Ouch. Double whammy.
Right. It's like they're getting hit from both sides, the supply side with fewer movies to draw in audiences, and the demand side with consumers tightening their belts.
You're in a great spot to be in.
Nope. And Beyond Meat, remember them. They're having a tough time selling a premium product in a price-sensitive market. Their plant-based meat alternatives are losing out to regular meat when people are watching their wallets.
It makes sense. Value for money often wins out, especially in times of economic uncertainty.
They even had to cut their annual revenue forecast, which is never a good sign.
No, it's not. It's a tough reality check for a company that was once seen as this big disruptor in the food industry.
And speaking of disruptors, Bumble, the dating app operator, just reported their first sales decline since going public back in 2021. Their growth has slowed down, and they're facing increased competition and changing user behavior.
The online dating market is definitely maturing.
Now, Carlyle Group, the private equity firm, they actually managed to post flat third-quarter profits. But it wasn't all smooth sailing. They had to increase compensation to attract and retain talent. Seems like everyone's fighting for good people these days.
Definitely. Skilled workers are in high demand.
Okay, let's talk about Corteva, an agrochemicals firm. They reported a larger-than-expected loss, hurt by lower sales and prices.
The ag sector's been struggling. Lower crop prices are squeezing farmers, and that means they're cutting back on spending for things like pesticides and insecticides.
And that directly impacts companies like Corteva. It's all connected.
It is. Everything's connected. And this brings us back to Coty Inc., the beauty products company. They're also expecting lower annual profits as that weak demand for beauty products just keeps going. It's that discretionary spending trend again. It is, and it really highlights how important it is for companies to understand and adapt to these shifts in consumer behavior.
For sure. Now let's jump back to the energy sector. Energy Transfer, the pipeline company we talked about earlier, they're actually reporting higher than expected third-quarter profits.
Really?
Yeah, they had record volumes of crude oil transported on their systems, and they're also benefiting from that increased demand for natural gas, particularly from those power plants and data centers.
Interesting. So they're kind of capitalizing on multiple trends at once.
They are. Okay, moving on to Fair Isaac, the company behind the FICO credit score. They reported a better-than-expected fourth-quarter profit. Seems like lenders are still eager to assess credit risk, even in this uncertain economy.
It seems so. But there's a twist. They also lowered their profit forecast for the coming year, so it's not all rosy. They're anticipating some headwinds.
Yeah, it's a bit of a mixed bag, isn't it?
It is.
Okay, Freshworks. Remember them, the software company that announced those layoffs?
Uh-huh.
Well, they're not just cutting jobs, they're also cutting their revenue forecast. It looks like they're really tightening their belts.
It's a trend we're seeing across the tech sector. Companies are getting leaner and adjusting to a less exuberant growth environment.
The days of easy money and rapid expansion, they're fading.
Yeah, it seems so.
Let's talk about Gilead Sciences. They're a major pharmaceutical company, and they reported strong third-quarter earnings that actually beat expectations.
That's good news.
It is. But they did highlight some challenges in the healthcare sector.
Like what?
Well, while their HIV and Veklury sales were strong, they faced some headwinds with their cell therapy business. And they had to take a big impairment charge related to an acquisition they made back in 2020.
Ah, the joys of mergers and acquisitions. Sometimes they work out, sometimes they don't.
Exactly. And Gilead's results are a reminder that even these big, established companies in seemingly stable sectors face uncertainties.
It's true. No one is immune to the winds of change.
Speaking of winds of change, let's check back in with Halliburton. They reported a miss on their third-quarter profit estimates, mainly because of that slowdown in drilling activity in North America.
Right, their North American revenue was down 8.5% in the third quarter. It's a tough time for oil field service companies.
It is. Now let's shift gears to Host Hotels and Resorts. They're a real estate investment trust that owns a bunch of hotels, and they just cut their profit forecast for the year.
What's going on there?
Well, they cited weak U.S. leisure travel demand and a slow recovery in Maui as key factors.
Makes sense. The travel industry is still in recovery mode after the pandemic, and some areas are bouncing back slower than others.
And Kenvue, the consumer health company that spun off from Johnson & Johnson earlier this year, they reported sales that were a bit below Wall Street's expectations.
Huh, interesting. What happened?
Their skin health and beauty unit, which includes brands like Neutrogena and Aveeno, was the main source of weakness. Plus, they're facing pressure from an activist investor to improve their performance.
It sounds like they have their work cut out for them.
Okay, let's talk about Kyndryl. They're an IT services provider, and they actually managed to beat revenue estimates for the second quarter.
Really? That's good news for them. What drove their success?
It seems like their consulting services related to generative AI technology are in high demand. Their consulting business revenue soared by 23%.
Wow, 23%. That's impressive. It shows that businesses are really starting to embrace AI and are looking for guidance on how to implement these technologies effectively.
For sure. And they also narrowed their net loss for the quarter, so they're moving in the right direction.
It sounds like they're making progress.
And now for an update on Lyft, the ride-hailing company. Remember how we talked about them projecting strong fourth-quarter bookings?
Yeah, I do. They're banking on people returning to offices.
Well, their shares jumped like crazy after they made that announcement, up 22% in after-hours trading.
22%. That's a big jump. Clearly, investors are feeling optimistic about their prospects.
Absolutely. It's a good reminder that even in a volatile market, positive news can have a big impact. Now, not every company in the ride-hailing space is feeling as optimistic as Lyft. Match Group, the parent company of Tinder, just projected fourth-quarter revenue below Wall Street's estimates.
Oh, that's not good.
No, it's not. Their turnaround seems to be taking longer than expected. They missed their third-quarter revenue estimate as well, and their paying users have been declining.
It sounds like they're facing some headwinds. Increased competition, changing user behavior. It's a tough market.
For sure. Okay, let's switch gears to Marathon Oil, a shale producer. They actually exceeded Wall Street's expectations for third-quarter profit.
Wow, really? That's surprising, given all the talk about slowing oil and gas production.
It is. Their strong performance was driven by higher production and strong demand for oil. They even raised their full-year production forecast, citing increased U.S. oil consumption.
Interesting. So despite the concerns about a potential economic slowdown, demand for oil seems to be holding up.
At least in the U.S., yeah. Now let's talk about McKesson. They're a drug distributor, and they raised their annual profit forecast driven by strong sales in their U.S. pharmaceuticals segment.
Their second quarter revenue also beat analysts' expectations. It seems like demand for medications, especially specialty and branded drugs, is still robust.
It is. It's a reminder that healthcare is a complex industry with a lot of moving parts.
It definitely is.
Okay, back to Moderna, the biotech company we talked about earlier. They reported that surprise third-quarter profit, remember?
Yeah, they made some smart cost-cutting moves.
They did, but they also admitted that revenue from their new RSV shot has been low. It just goes to show that not every product launch is going to be a home run, even for a company like Moderna.
That's true. Developing and commercializing new drugs and vaccines is a risky business.
Okay, let's move on to Nutrien, a fertilizer producer. They actually missed Wall Street's expectations for third quarter profit.
What happened there?
Lower crop prices are impacting farmer spending on fertilizers. It's a ripple effect from those lower commodity prices we talked about earlier. It seems like everyone's feeling the pinch.
It's all connected.
Now, let's talk about PTC, an industrial software maker. They're forecasting first quarter revenue below estimates, signaling continued weakness in demand for their software.
What's driving that weakness?
It seems like companies are tightening their budgets and cutting back on software and technology investments.
That's a sign of the times. When economic uncertainty looms, businesses often get cautious with their spending.
Exactly. Okay, back to Qualcomm, the chip designer we talked about earlier. They actually provided a surprisingly optimistic outlook, forecasting sales and profit that exceeded Wall Street's estimates.
Really? That's good news for the tech sector.
It is. Their strong performance is being driven by robust demand for their chips from Chinese smartphone makers. They even announced a new $15 billion stock buyback program, signaling their confidence in their future.
$15 billion? That's a big chunk of change. They're definitely putting their money where their mouth is.
They are. All right, let's talk about Steris, a medical equipment maker. They beat second quarter profit estimates, thanks to continued demand for those non-urgent medical procedures.
That makes sense. Healthcare is often considered a non-cyclical industry, meaning that demand for medical services tends to hold up even during economic downturns.
Exactly. People still need their healthcare regardless of what's happening in the economy.
Exactly. People still need their healthcare.
Okay, let's move on to Take-Two Interactive Software, the video game maker behind popular franchises like Grand Theft Auto and Borderlands. They exceeded Wall Street's expectations for both second quarter bookings and profit.
It seems like the video game industry is doing well despite the economic uncertainty.
It is. It makes sense, though. People turn to entertainment and escapism, especially during tough times.
Makes sense.
Okay, Tapestry, the parent company of Coach, just raised their annual earnings target and exceeded revenue expectations for their first quarter.
Wow, really? That's impressive.
Yeah, they're seeing strong sales of their handbags, particularly their Tabby line, and they're focusing on full-price sales, which indicates strong demand and a loyal customer base.
So even with economic concerns, consumer spending on luxury goods seems to be holding up.
For sure. Okay, Williams Companies, a pipeline operator, just beat third quarter profit estimates.
Pipelines, really? What's driving their success?
It seems like they're benefiting from increased service revenues and higher flows of natural gas liquids. They even raised their profit outlook for the year.
Wow, so the demand for natural gas transportation and processing is still strong.
It is, and this highlights how certain parts of the energy sector can be quite resilient, even when the overall market is volatile.
Makes sense. Energy infrastructure is essential no matter what's happening in the world.
All right, let's talk about Wolfspeed, a chip maker. They actually gave a disappointing outlook, forecasting quarterly revenue below estimate.
Oh no, what's going on with them?
It looks like demand from their automotive customers is slowing down. Plus, they're closing a facility and shifting to a more efficient manufacturing process. So that's going to cost them some money in the short term.
The semiconductor industry is definitely a roller coaster ride.
It is. Okay, before we move on, let's touch on some interesting deals and developments in the business world. Avid Bioservices, a biopharmaceutical company, is being acquired by a group of private equity firms in a deal worth over $1 billion.
Wow, $1 billion. Private equity is still hungry for deals.
They are, especially in the healthcare and life sciences sectors. Amazon just announced plans to invest over €1 billion in Italy over the next 5 years to expand their data center business.
Amazon's data center business is booming. They need more capacity to keep up with demand.
They do, and speaking of big tech, India's financial crime agency just raided the offices of some sellers operating on Amazon and Flipkart. They're investigating potential violations of foreign investment rules.
Interesting. It seems like regulators around the world are starting to take a closer look at the practices of these big e-commerce platforms.
Now to the skies. Taiwan's China Airlines is reportedly close to splitting a multi-billion-dollar order for passenger jets between Airbus and Boeing.
It's a battle of the titans. Airbus versus Boeing, it's always a high-stakes competition.
Speaking of high stakes, the Israeli Defense Ministry just signed a deal to buy 25 next-generation F-15 fighter jets from Boeing. That's a $5.2 billion deal.
$5.2 billion. the defense industry keeps on rolling.
Global Foundries, a semiconductor manufacturer, is reportedly in line to receive a big chunk of money from the Biden administration as part of the CHIPS and Science Act.
It looks like the U.S. is serious about boosting domestic chip production. They want to reduce their reliance on foreign suppliers.
And finally, UBS Group, a Swiss bank, just piloted a blockchain-based payment system.
Blockchain, I knew it. It's slowly creeping into every corner of the financial world.
They tested it with multiple currencies: US dollars, Swiss francs, euros, even Chinese yuan.
That's really interesting. Imagine a world where financial transactions are instantaneous and borderless, thanks to blockchain. The possibilities are mind-boggling.
They are. All right, that's a wrap for our lightning round of deals and developments.
Wow, that was a lot to take in. The business world never sleeps.
It certainly doesn't. But I think it's important to remember that behind all these headlines, all these numbers, are real people, real businesses, real stories of success and struggle. It's easy to get caught up in the abstract, but at the end of the day, business is about people.
Couldn't agree more. It's about the people who are innovating, who are taking risks, who are building companies, who are creating jobs, who are making a difference in the world.
And it's about the people who are impacted by these decisions, the consumers, the employees, the communities. Business is a human endeavor, and it's important to keep that in mind as we navigate this complex and ever-changing world. So we've covered a ton of ground, huh? It's amazing how all these stories, they all kind of connect in the end.
Yeah, they do. It's like we're putting together this giant puzzle, trying to see the big picture.
Right. And I think one of the biggest takeaways, just from looking at everything, is this feeling of uncertainty in the economy right now.
It's definitely a time of big changes, right? We see it everywhere. Consumer behavior shifting, technology moving so fast, global politics all over the place. And then, of course, a new administration. Well, sort of new.
Yeah, Trump's re-election, it throws a wrench into things.
It does. Makes it even more important for businesses and people investing to be, flexible. Think strategically.
We saw some companies, Moderna, Elf Beauty, Energy Transfer, they're really good at that. Adapting, making these smart moves, to take advantage of the changes happening.
They're seeing those trends, anticipating what's coming next and changing their strategies, like reading the tea leaves, but for business.
But then you have companies like Albemarle, Beyond Meat, Freshworks. They're facing some real challenges. Makes you wonder, are they moving fast enough, or are they stuck doing things the old way?
That's the question, isn't it? Will they adapt, or will they become those examples of, what not to do?
It's like survival of the fittest, but for businesses. The ones that adapt best, they survive.
Exactly. It's not about being the biggest anymore. It's about being quick, being innovative. Those are the companies that do well in this kind of environment.
That's a good lesson for all of us, right? Whether you're running a company, investing, just trying to figure out what's going on in the world.
Absolutely. We all got to keep learning, keep adapting, and be ready to question everything we thought we knew. What worked yesterday, it might not work tomorrow.
Okay, let's talk about something specific. Artificial intelligence. It's been generating a lot of buzz lately.
AI, right. Everybody's talking about it, and there's a reason.
Yeah.
It really has the potential to change everything, so many industries.
We saw that with Kyndryl, right? The IT company. They're seeing huge demand for their AI consulting services. Their revenue from that, it was up like 23% this quarter.
23%, that's amazing. Shows you businesses are really interested in AI. They want to use it to improve how they work, make their product and services better, get ahead of the competition.
But there's that flip side too, right? The concerns about jobs, about, ethics and AI being misused.
Right. AI, it's powerful, and like anything powerful, it can be used in good ways and bad ways. We have to think carefully about what AI means for all of us and make sure it's developed ethically.
Totally. We have to make sure it's used responsibly and that everybody benefits from it.
And that actually connects to another big idea we've seen today, stakeholder capitalism.
Stakeholder capitalism, what's that?
It means businesses need to think about everyone they impact, not just people who own stock, employees, customers, suppliers, the community.
So taking a bigger view, right? It's not just about making money, it's about creating value for everybody.
Exactly. And we're seeing a lot of companies doing this now, focusing on the environment, on social issues, on ethical behavior.
So it's not just about doing good things, it's about doing good things while also doing well as a business.
Yeah, they go together. Companies are realizing their long-term success depends on sustainability, on being ethical. It's good for the world and good for business.
Now, how does this all fit with Trump being reelected? What does it mean for this stakeholder capitalism idea for corporate social responsibility?
Good question, good question. It's early, but it's likely Trump's reelection will have an impact on how companies approach social responsibility here in the U.S.
Trump, he's been known for being pro-business, for less regulation. Could we see, less focus on this stakeholder capitalism idea that's been getting popular?
Maybe. Trump might be more inclined to support policies that focus on shareholders, people who own stock rather than all these other stakeholders. But there's also this growing movement within companies themselves pushing for more social responsibility, regardless of what the government does.
So it's like a push and pull between those two sides.
It is. It'll be interesting to see how it all plays out over the next few years. Will companies stick with stakeholder capitalism, or will they go back to focusing just on shareholders?
Another reminder that things are always changing in business. Always new challenges, new opportunities.
And that's what makes it so interesting. We're not just watching, we're actually part of how things change.
Yeah, let's talk about energy. Another sector with a lot going on.
Energy, yeah, it's like the engine of the global economy, and it's going through this massive transformation.
We saw that, right?
Yeah.
Halliburton's struggling because oil and gas drilling is slowing down.
Yeah.
But Energy Transfer, they're finding ways to grow a natural gas.
It's like two different worlds in one sector. The old oil and gas industry is facing challenges, but renewables, they're growing fast.
And natural gas is kind of in the middle, right? It's cleaner than oil and coal, and it's reliable, even when the sun isn't shining or the wind isn't blowing.
Right. Not too dirty, always there when you need it. That's why power plants and data centers want more of it.
But natural gas has its issues too, right? Like methane leaks, that's a powerful greenhouse gas. And fracking, that's controversial.
True. There's no perfect energy source. We have to weigh the good and the bad for every decision we make.
Yeah, no easy answers. We need lots of different energy sources, and we need to keep investing in cleaner, more sustainable solutions.
Which leads to another big theme we've seen: resilience.
Resilience, what do you mean by that?
Being able to change, to bounce back after something bad happens, to do well even when things are uncertain.
Like Moderna, Elf Beauty, Energy Transfer, they're all showing resilience. They're changing their strategies, finding new opportunities.
They're not letting problems stop them. They're learning from those problems and getting better.
That's a good lesson for everyone. We all have setbacks, but it's how we deal with them that matters. If we can be resilient, we can turn bad things into good things.
I like that. Turning bad things into good things. It's all about how you look at it, right?
Totally. Focus on solutions, not problems. Look for opportunities, not roadblocks.
And be brave enough to change, to step outside your comfort zone.
Okay, let's talk healthcare. Another sector undergoing big changes.
Healthcare, always changing. New science, new technology, people living longer. The demand for good, affordable care is always growing.
Gilead Sciences, they're dealing with all the complexities of developing new drugs, of mergers and acquisitions. Steris, they're doing well because people still need medical devices and procedures.
It's a sector full of contradictions, We have amazing new treatments that are helping people live longer, healthier lives. But healthcare costs keep rising, and not everyone has access to good care.
It's a complicated situation for sure.
It is, and it's ripe for disruption. Telemedicine, artificial intelligence, they have the potential to change everything about how we access and receive healthcare.
That's exciting, but it also makes you think about fairness and access. How do we make sure everyone benefits from these changes, not just a few?
That's the key question. Healthcare should be a right, not a privilege. Everyone deserves access to the care they need.
Absolutely. And that brings us back to another theme: social impact.
Right, the idea that businesses aren't just about making money, they should also be making the world a better place.
We're seeing this with ESG investing, right? Environmental, social, and governance factors. People want their investments to do good, not just make money.
It's more than just a trend, it's a real change in how people think about business.
So how does Trump's re-election play into this? What does it mean for ESG investing and this focus on social impact?
Well, Trump's policies have generally been about economic growth, less government involvement. He hasn't been a big supporter of ESG investing.
Could that mean less focus on ESG now that he's been reelected?
Maybe, but the ESG movement has grown so much in the last few years. It's bigger than any one president or administration.
So it's not going away?
No. It reflects a fundamental change in how we think about the role of business in society.
Let's switch gears again. What about consumer goods? What's happening there?
Consumer goods, it's all about keeping up with the trends. People's tastes change, new things become popular. It's fast moving.
We saw that with Coty, right? They're struggling because demand for beauty products is down. But Elf Beauty? They're doing great by offering more affordable options.
Companies need to stay ahead of the trends, you know? What was hot yesterday might be old news tomorrow. You got to keep innovating, keep changing.
And technology is changing everything too. How people shop, how they interact with brands, e-commerce, social media, it's all part of it.
Yeah, consumer goods companies have to be online, they have to be on social media, they have to make shopping easy and personalized.
And all of this while dealing with global supply chains, rising costs, more competition.
It's a lot to handle, but it's also an exciting time. So much innovation happening, so many new opportunities.
Okay, what about travel and hospitality?
Right.
That sector's been through a lot.
Oh, yeah. The pandemic hit them hard, but they're starting to come back, although it's a bit uneven.
Host hotels and resorts, they're having trouble because leisure travel is down. But other companies are saying bookings are up, and they're optimistic about the future.
Some places are recovering faster than others, and different types of travel are recovering at different speeds.
And technology, it's changing how people travel, how they book trips, how they experience new places, how they share their experiences.
It's a whole new game for travel and hospitality companies. They have to be good at digital marketing, they have to offer personalized experiences, they have to use technology to make things better for the customer.
And they have to deal with all the changing travel rules, health and safety concerns, and what travelers expect.
It's a challenging industry, but it's also very rewarding. There's nothing like helping people see the world and make memories.
Okay, let's talk about technology. It's driving so much change everywhere.
Technology, yeah, it's all about innovation and disruption.
Qualcomm, they're doing great because everyone wants the chips that power our smartphones. But Freshworks, they're struggling with layoffs and slower growth.
Technology never stands still. New things come along, old things get disrupted.
And artificial intelligence, it's changing how we work, how we live, how we interact with everything.
Exciting times to be in tech. So many possibilities, and it's only getting faster.
But we have to be careful too, right? Jobs being replaced, privacy concerns, fake news spreading online.
Technology is powerful. We have to use it for good.
Okay, let's move on to financial services, another essential part of the economy.
Financial services, that's all about managing money, providing loans, keeping the economy moving.
Fair, Isaac. They're doing well because everyone wants credit scores. But other companies are dealing with rising interest rates, with consumers changing their spending habits.
Financial services are always changing, with new technology, new regulations, and people and businesses needing different things.
And fintech, that's shaking things up too, creating new opportunities for innovation.
It's a really interesting time to be in finance. So much potential to make things better, to make sure everyone has access to financial services, to make things more efficient and transparent.
But we have to be aware of the risks too. Cybercrime, data breaches, new ways people are trying to cheat the system.
We have to balance innovation with security, make sure the financial system is safe and stable.
Let's talk about manufacturing. It's responsible for making all the things we use every day.
Manufacturing, yeah, it's facing some headwinds. Costs are rising, supply chains are disrupted, and there's more competition from countries where labor is cheaper.
Wolfspeed, they're having trouble with slowing demand, and they have to upgrade their technology. It's not easy being a manufacturer these days.
But there's a lot of innovation happening in manufacturing, too. 3D printing, robots, artificial intelligence, they're all changing how things are designed, made, and delivered.
Lots of possibilities to make things more efficient, to lower costs, to create supply chains that are more resilient and sustainable.
But we also have to think about the impact of automation on jobs. We need to make sure workers have the skills they need for these new manufacturing jobs.
It's about making sure everyone benefits from innovation, that nobody gets left behind. Okay, so we've talked about the markets, Trump's re-election, and all these trends shaping the business world.
Yeah, it's been a wild ride, that's for sure. Full of surprises.
And that brings us to the question we always like to leave our listeners with. What does it all mean for you? Where do you see potential for growth and success in all this change?
That's the million-dollar question. Like trying to predict the future, right? So many things could happen.
But we can make some educated guesses.
Right.
We've seen some pretty clear trends, haven't we?
We have. The shift to sustainable business, stakeholder capitalism, the rise of AI, energy transition, changes in how people buy things.
Those are some big trends.
They are. And the companies that can ride those waves, the ones that adapt, innovate, think ahead, they're the ones that'll succeed.
So what are you watching? What industries, what companies? What's catching your eye?
Honestly, I'm fascinated by renewable energy. The whole world's shifting to cleaner energy, and the companies making that happen, they're going to grow a lot.
I agree. And it's not just solar and wind anymore. Geothermal, tidal power, even fusion energy. It's incredible what's happening.
It really is. And then there's AI. It can change literally every industry.
Healthcare, finance, transportation, AI is already being used in so many ways.
And we're just getting started. It's still early for AI, but it's developing so fast, the possibilities are almost endless.
It's kind of scary too, right? To think how AI could change everything we know.
It is, but it's also incredibly exciting. AI has the potential to solve some of our biggest problems, like climate change, poverty, disease.
So how should people be thinking about AI? Embrace it, fear it, something in between.
Be curious, but be cautious too. We need to understand the risks, but also be open to the possibilities.
Find that balance between innovation and responsibility.
Exactly. We got to make sure AI is developed and used in a way that benefits everyone.
So we've talked about renewable energy and AI. Anything else people should be paying attention to?
The future of work, that's another big one. How we work is changing so fast. Automation, globalization, the gig economy, it's all changing things.
I'm interested in that too. Technology could create new jobs that are more meaningful, more flexible.
Me too. But we can't forget about the challenges. Jobs being replaced, people needing new skills.
Everyone needs a chance to do well in this new world of work.
And that ties back to stakeholder capitalism, right? Businesses have to think about their workers when they make decisions about the future of work.
It's about finding solutions that work for everyone, where businesses can grow and innovate, but workers are also supported and empowered.
Yeah, finding that balance between profit and purpose.
So as we wrap up, here's a final thought for everyone.
Okay, I'm listening.
The world of business, it never stops changing. There are always new challenges, new opportunities.
It's always moving, always something new.
The one thing we know for sure is that change is going to happen.
Embrace the change. Don't be scared to try new things, to experiment, to learn.
The future belongs to those who adapt, who innovate, who think differently.
So to everyone listening, stay curious, stay informed, stay ahead of the game.
And as always, keep on deep diving.